Okay, let's unpack this. Today, we're undertaking a really targeted deep dive into the mechanics of antifragility.
Right.
Our listeners' source material asks us to focus strictly on the structural dynamics. The plumbing, the wiring, the actual architecture of complex systems.
And to specifically ignore the philosophy, the anecdotes, all the personal tone.
Exactly. This is all about the mechanics.
What's fascinating here, I think, is that commitment to a purely clinical systemic analysis. We're essentially shifting the conversation from, say, how people react to uncertainty to how systems are fundamentally designed to operate or, tragically fail when they face volatility.
Right. So our mission is to extract a purely operational understanding. We're looking for 4 critical signals in these structures: hidden risk, agency structures, what are called second-order effects, or iatrogenics.
And finally, some practical methods for detection.
Exactly. This is an intellectual dissection. We're looking for that fundamental asymmetry. What systems structurally benefit from chaos and which ones are, well, almost mathematically destined to break. It's about defining the architecture of resilience.
I think that's the key word, architecture.
So let's start with that first critical signal, and it's maybe the most counterintuitive one. It's how the predictable, often very rational attempt to stabilize a complex system can paradoxically generate hidden catastrophic risk.
And to really get that, you first have to grapple with the reaction functions within complexity itself.
The mechanism of nonlinearity.
The mechanism of nonlinearity, exactly.
Yeah.
Complexity, just by its definition, means we're operating outside the realm of simple cause and effect.
Right. Things are interconnected in ways we can't always see.
Precisely. You have this high interdependence, which is, extremely difficult to recognize, and crucially, nonlinear reactions. This nonlinearity is the core structural mechanism that determines if a system is fragile or antifragile.
And nonlinear sounds very technical, but it's a concept that's actually quite easy to grasp. It just means the reaction graph isn't a straight, predictable line.
Right.
In a linear world, if you double the input, you double the output. Think of baking a simple loaf of bread. You double the flour, you double the size of the loaf.
It's a little predictable.
But in a nonlinear world, say complex chemistry or social dynamics, or even the impact of a drug dosage, doubling the input does not double the output.
The return is either much, much greater than you expected or much, much less.
So you always get a curved reaction graph, never a straight line.
Always. And think about the simple act of driving your car faster. If you double your speed from, say, 30 to 60 miles per hour, your travel time is cut in half. That's a linear benefit.
Okay.
But the severity of an accident, if you crash, it doesn't just double. It might quadruple or even more because of the kinetic energy involved.
So that's a nonlinear cost.
A huge nonlinear cost. In these complex environments, simple causal connections are really the anomaly. Nonlinearity is the rule.
Which brings us to convexity and concavity. These are the mathematical terms that define that outcome.
Precisely. The shape of that curve mathematically determines a system's destiny when it's under stress. The difference between fragility and antifragility is all about whether the system responds positively, that's convexity, or negatively, which is concavity, to variables like disorder or stress.
So if a system is
If it's concave, small shocks are fine. They might even be negligible. But a big shock will disproportionately devastate it. The marginal negative return just gets bigger and bigger with stress.
And with convexity, the opposite is true. Small shocks might not do much, but a big shock gives you these disproportionately large benefits.
It's a beautifully simple concept once you see that asymmetry.
It really is.
And that asymmetry is absolutely fundamental. The mathematical definition of convexity is just the tendency to gain from volatility and dispersion.
Whereas concavity is the tendency to suffer from it.
Right. Think about car insurance. A person who buys insurance is paying small, frequent, and very certain costs, the premiums, all to avoid a single, massive, unpredictable cost, a big accident. The insurance company is built to handle that concavity. You, the driver, are insuring your own concavity.
So the system is just structurally transferring that catastrophic tail risk.
Exactly. Our inability to recognize and manage these nonlinearities in, say, complex political or economic structures, that's the first systemic flaw we need to understand.
It seems like recognizing the shape of the curve, the degree of concavity, is actually more important than trying to predict the next input.
That's it. You're focusing on the reaction architecture over the forecasting ability.
So moving up to the macro level, we have to talk about the systemic danger that comes from trying to smooth out natural variability.
This is a big one. The word volatility itself comes from the Latin verb volare, which means to fly. Change, variation, that's the natural state of any robust system.
And yet, in fields like finance, bureaucracy, and public policy, you constantly see central planners and regulators trying to suppress that natural variability. And the core structural argument here from the source material is that protecting these systems from small, regular volatility is ultimately harmful.
It is.
Why? Because you're just replacing frequent, necessary small failures,
With the certainty of a single, massive, catastrophic failure down the line.
which is the mechanism that leads to this systemic error called the Great Tranquility Trap.
Right. That phrase became notorious for describing the low observed economic volatility, the apparent calm, right before the 2008 financial crisis.
Declaring any system stable just because it's had low recent volatility, that's a profound systemic failure.
And it's rooted in flawed induction.
The analogy in the source material is perfect for this. It's like declaring a person who spent 10 years in a hermetically sealed, sterile room absolutely healthy. I mean, technically they haven't been sick, but they aren't robust. They're infinitely fragile to the first germ or stressor they encounter outside that room.
That structural lack of exposure to necessary small stressors has guaranteed a catastrophic fragility to a black swan event.
Stability in this context is just the transfer of small, manageable risk into giant terminal risk.
And this failure of induction gets formalized with what's called the turkey problem.
Okay.
And this is a devastating critique of traditional risk management. Risk managers routinely rely on stress testing, where they estimate future risk by archiving the worst-case scenario known to history.
So they look at the deepest recession, the worst pandemic, the highest interest rate they have on record, and they build their models based on that maximum known stressor.
Right. But the contradiction they ignore is so simple, yet it's so critical.
Which is?
The worst historical event they're using for their stress test was, when it occurred, worse than all the previous worst-case scenarios known at that time.
Of course. So if history is your measure, where did the historical event that broke the previous measure come from?
It came from the future, and it was unpredicted. This is the Lucretius problem. Assuming the highest mountain you've ever seen is the highest mountain that exists. When you're dealing with systems prone to what are called fat tails, meaning extreme rare events, your measurement errors just explode. Standard statistical models, the ones that rely on the Gaussian bell curve, they predict that these massive 5 sigma events are nearly impossible.
But in the real world of finance, ecology, social movements, those impossible events happen with alarming frequency.
Exactly. So the error isn't that we calculated the risk incorrectly. The error is thinking the risk was calculable in the first place.
Or believing that our history somehow captures the full spectrum of future possibility.
You're saying that in these environments, when the measurement errors are so high, sometimes infinitely high, especially when you're talking about the future maximum deviation, the word measurement itself just loses all structural meaning.
Great. And that shifts the focus entirely from predicting the crisis.
To architecturally surviving the unpredictable crisis.
Exactly. When you're looking at fat-tailed systems, the model breaks. The only intellectually honest response is to stop relying on prediction and start engineering systems that might actually benefit from the unpredictability itself.
That pivot from prediction to architecture is, I think, perfectly illustrated by the source materials comparison of 2 different professional structures. It shows this transfer of risk in action.
The stable worker versus the one in constant flux.
Right. The one who seeks to eliminate volatility versus the one who lives in it.
So you have the stable worker, let's call him John, the bank HR employee. He seeks to eliminate all minor volatility from his life. His income is absolutely stable. Let's say 82 transferred to his account every month.
From an accounting perspective, his employer has given him maximum short-term security.
But that perceived stability, ironically, creates catastrophic fragility.
Because he's outsourced all the short-term variability to his employer. His entire structural existence depends on the absolute continued existence of that one single source of income. So if his job is eliminated, a massive black swan event for him, maybe triggered by the very crisis his colleagues in the trading division created, he's devastated.
And he may never recover, especially after, say, age 50, when re-entry into that secure corporate structure is nearly impossible.
His comfort today is paid for by existential vulnerability tomorrow.
Now, let's compare that structure to George, the taxi driver.
George's daily income is highly variable. He deals with constant disorder, bad traffic, Changing gas prices, unexpected car repairs, slow days.
Some days he makes hundreds of pounds, some days he actually loses money. He is constantly exposed to small-scale volatility and disorder.
And crucially, this constant day-to-day exposure makes his economic system robust, maybe even anti-fragile against major shocks.
He's continuously tested.
He's forced to adapt his driving routes, manage his cash flow, budget for unexpected car problems. He has to learn which days or locations will give him the best returns. He is structurally integrating small failures, bad days, into his routine.
So while John has this illusion of security and George has an illusion of instability,
The source argues that George's fluctuating system is constantly adapting. And because of that, it's less vulnerable to a catastrophic single event like an industry collapse or a major economic downturn.
John is tied to a fragile, centralized system.
Whereas George's income stream is decentralized across thousands of daily microtransactions. If a banking crisis hits, John is ruined. George, who is used to daily uncertainty and adapting his business, he just sees another bad day that he already has the tools to manage.
So the systemic lesson here is vital. The fragile entity tries to smooth out all the minor variations, and in doing so, transfers all that risk into a single, massive, unexpected failure point.
While the antifragile entity George uses those minor variations as constant necessary inputs to maintain systemic health and continuous adaptation. Which brings us to our second critical structural signal. And this is often what superimposes fragility onto otherwise robust systems.
The decoupling of risk from consequence.
The agency problem. To understand systemic architecture, you have to mechanically determine who benefits from the upside of taking risks.
And more importantly, who pays for the inevitable tail risk?
The agency problem comes up when one party, the agent, a manager, a corporate executive, a politician, acts on behalf of another. The principal.
So the shareholders or the public?
Exactly. The agent benefits immensely from any potential upside, but they succeed in externalizing the catastrophic downside risk onto the principal, or just the public in general.
It's the privatization of gains coupled with the socialization of losses.
And this structural imbalance acts as a powerful lever, driving complex systems straight toward catastrophe. Managers routinely generate massive, low-probability risks because the potential reward to them is huge.
Bonuses, stock options.
Right. But when disaster strikes, they are not personally harmed by the collapse. They walk away wealthy, leaving the system devastated.
The source material points out a crucial systemic flaw here. The concept of negative managerial compensation just doesn't exist.
It doesn't. Executives often keep their bonuses even after a catastrophic failure because their loyalty is strictly to their own short-term cash flow and career progression, not the long-term systemic health of the organization they're managing.
So the payoff function is convex for the manager, but it's concave for the system.
And this structural position enables the fragilista, a figure who just talks, forecasts, and theorizes. They are structurally placed below entrepreneurs who actually risk their own resources.
And society grants these talkers complete freedom of action even when their flawed, often mathematically ignorant predictions cause systemic harm.
Exactly, because they bear no personal downside. They generate volatility for others without ever experiencing the pain of that volatility themselves.
Can you give us a specific, really damaging example of this decoupling from the source material, something that shows the structural failure really clearly?
The prime example is a rating agency loophole leading up to the 2008 crisis. These agencies gave pristine AAA ratings to toxic assets, these complex bundles of substandard mortgages.
That subsequently imploded, harming pensioners, institutional investors, the whole economy.
Right, and yet the agencies themselves were shielded from any serious accountability.
How were they shielded?
By a systemic loophole that allowed them to claim press status or First Amendment protection.
So they argued their ratings were just opinions, like journalism.
Precisely. They successfully argued that their ratings were merely opinions or predictions, and that shielded them from accountability for their economically damaging, non-journalistic predictions.
Unbelievable.
They profited massively from issuing this false certainty without bearing any of the consequences when that certainty was proven catastrophically wrong. This is the agency problem defined.
Those who benefited from the prediction did not suffer the consequences.
The risk was transferred to the masses, often needing massive public bailouts to fix.
So it's an issue of structural asymmetry. The system has to structurally change the payoff architecture to align risk and reward.
Otherwise, managers and fragilistas will always maximize their convex payoff while pushing the concave consequences onto everyone else.
Which means the required structural correction is, conceptually at least, Pretty simple.
though often politically radical. It's about enforcing what the source calls the doxastic obligation,
Put your skin on the line.
the foundational rule for building robust systems.
What does that obligation actually mean in practice?
It dictates that beliefs and opinions should only be taken seriously if the individual has assumed associated obligations and stands to lose something if they're proven wrong.
So it means establishing a real physical or financial consequence for failure.
Exactly. A central banker who designs a catastrophic policy should face genuine personal, financial, or professional ruin. Theoretically, the investment portfolio of a financial forecaster should confirm their words. They must physically share the downside risk.
This principle isn't new, though. It's not an invention of modern risk theory. It's actually encoded in these ancient, time-tested systemic heuristics.
Absolutely. They often provide better structural alignment than modern regulation. Consider Hammurabi's law.
Right.
If a building's design failed and it collapsed, it resulted in the death of the builder's son. Now that's extreme, but it enforced alignment.
A more direct architectural example is the Roman practice requiring engineers to sleep under the bridges they built.
If the bridge failed, the engineer physically held the downside risk of their own design. The risk was immediate, unavoidable, and personal.
It created an instantaneous, unforgiving feedback loop.
And it ensures maximum care and systemic alignment throughout the whole construction process.
It's a brutal yet brilliantly effective heuristic. It gets rid of the need for endless oversight committees or regulatory paperwork. The downside is just built into the design process itself.
Right.
But let's look at a more complex system where calculation is impossible, the problem of collective action, like in war. How did the Romans solve the agency problem in the military?
Through military decimation. Cowardice in battle is a classic game theory problem of agency. A soldier's optimal, self-interested strategy is to run faster than his comrade, not faster than the enemy.
You abandon the collective effort to save yourself.
And if that's allowed, this individual defection can quickly collapse the entire legion.
So how do you prevent that self-interested incentive from destroying the collective?
The Romans introduced decimation, executing 10% of a cowardly legion, chosen by lot, regardless of whether that specific soldier had been brave or cowardly.
That's terrifying, but brutally logical.
It makes the risk collective and unavoidable. The consequence of failure being killed by lot is now linked not to your individual action, but to the legion's collective outcome.
That's fascinating. It eliminates the incentive for individual defection by making the risk collective.
The system is structurally strengthened because the simple, strict heuristic of decimation bypasses the need to track every individual soldier's bravery in the chaos of battle.
It enforces loyalty to the group's outcome by ensuring everyone shares the tail risk.
It just shows that in environments of high complexity, where precise calculation and oversight is impossible, simple draconian heuristics that align personal consequence with collective failure are the most robust structural solution.
So once we align incentives through consequences, the next mechanical step is adopting the right architectural posture for dealing with uncertainty,
which the source defines as the Barbell Strategy. And this isn't just a tactic, it's a necessary architectural condition for achieving antifragility.
Okay, so what is it?
The barbell, or two-level strategy, is fundamentally about avoiding the dangerous moderate middle ground.
The middle ground is dangerous.
Very. That moderate middle, the 50-50 allocation, the mildly diversified portfolio, the conventionally balanced career, is precisely the zone where you have enough risk to suffer a catastrophic loss.
But not enough exposure to extreme events to capture massive outlier gains.
You're in a highly concave position.
So the barbell structurally eliminates that concave danger zone by combining two extremes. One segment is extremely safe and the other is aggressively risky.
Mechanically, the strategy achieves two distinct and non-negotiable goals at the same time. First, mitigation of downside. You dedicate the vast majority of your resources, say 80 or 90%, to an extremely safe, guaranteed position.
Cash, treasury bills, something with no risk.
Physical stability. This limits your potential loss from negative black swans to a manageable, non-existential level. You ensure your survival.
And second,
maximizing upside. The small, high-risk segment, the remaining 10 or 20%, is allocated to high-reward ventures, aggressive experimentation, or completely decentralized high-volatility efforts.
so you maximize your exposure to potential large positive gains from uncertainty convexity.
And crucially, because your base is so safe, losing the entire risky segment is just a minor setback, not a systemic collapse.
This dual architecture is inherently more robust than a single moderate approach. It allows the system to experience maximum volatility on the risky end while guaranteeing security on the safe end.
It's a structural separation of risk profiles.
And you can apply this to life or policy.
Absolutely. In policy risk, the barbell would dictate that you should keep essential systems simple and robust like infrastructure maintenance, while allowing decentralized, small-scale, high-risk experimentation in other areas, like research funding.
You protect the core from collapse.
The analogy from the source for structural safety captures this perfectly. You should seek a scenario where stewardesses are maximally optimistic and the pilot is maximally pessimistic.
Right. The pilot is the 90% conservative element paranoia is structurally valuable when you're dealing with tail risk because it ensures survival.
And the stewardesses are the small, optimistic segment open to the upside. The overall system is protected from ruin, yet it remained open to significant positive variation and discovery.
So the barbell strategy is the mechanism for domesticating uncertainty. You limit loss and maximize potential returns.
That's the architecture.
Our third systemic signal, then, focuses on how well-intentioned top-down intervention often produces what's called generalized iatrogenics.
Unintended, often destructive harm.
Right. Harm caused by regulators, scientists, or policymakers. This is fundamentally about the failure of rationalistic planning in complex environments.
Generalized iatrogenics just describes harmful side effects that result from complex, non-local intervention. It comes from the structural impulse toward naive intervention.
The do-something impulse.
Exactly, a huge bias. The actual medical need for the operation, the source suggests, was only for about 2 to 4% of children. And crucially, 1 in 15,000 of these operations resulted in death.
So you have a clear, measurable downside, a small but definite chance of death imposed on the majority of children who didn't structurally need the intervention.
The potential benefit for the vast majority was negligible or zero, while the probabilistic harm was very real.
The error is structural then. Intervention without a clearly defined positive break-even point is fundamentally flawed.
And it leads to net systemic harm. This is where complexity just defeats rationalism. It's often far easier to observe harm than it is to calculate benefit. When the system lacks clarity, the default position should be via Negativa, do no harm.
Yet the pressure to intervene overwhelms that principle.
And we see this flaw mirrored in large-scale regulatory policy, which the source calls policy iatrogenics. A great example is aviation safety and the Federal Aviation Administration. The FAA mandated ever higher levels of automated flights, which were intended to increase safety and comfort by suppressing small, human-induced errors.
But this suppression of small, normal volatility ultimately weakened the system at a deeper level.
By protecting pilots from complicated, demanding tasks like manual control in unusual conditions, the system dulled their attention and degraded their reaction speeds. The pilots, starved of necessary stressors and continuous practice, lost their technique.
Their practical skill.
Right. So when a rare, complex systemic failure did occur, the very kind the automation was designed to avoid, the pilots, lacking the deep practical experience to manually override and correct the situation, often made fatal errors.
So the policy designed to increase safety produced a hidden, deeper systemic fragility.
All by removing the low-level stressors necessary for continuous training and adaptation. The system failed because of undertraining caused by the successive stability.
And the medical field just keeps providing these powerful illustrations of metric-driven iatrogenics, especially when we confuse measurable proxies with holistic systemic health.
Take the routine use of statins and cholesterol on low-risk patients. The intervention is teleological. It's aimed at lowering a measurable metric, the cholesterol level.
Rather than addressing overall systemic health.
Right. The source argues that for low-risk individuals, the benefit is often minimal or absent, while the long-term harms, the unseen generalized iatrogenics, are often unrecognized or underestimated.
The critique is profound. It's like silencing a smoke detector because the alarm is annoying without ever addressing the fire.
You're lowering a metric, improving a test score, but not necessarily improving the health of the complex organism.
Right.
And furthermore, the structural problem gets much, much worse when you consider design-driven drugs, this teleological approach. These drugs are meticulously planned in a lab, optimized for a single target, and then introduced into a biological system that's already saturated with tens of thousands of existing medications, food interactions, environmental factors.
The issue is the combinatorial explosion.
Exactly. When you introduce a new variable into a complex system, the number of necessary compatibility checks between the new drug and existing factors just grows rapidly. If you have 20 drugs in circulation, checking compatibility is manageable.
But if you have 1,000 drugs,
The number of necessary checks for the 1,001st drug explodes. The source notes that research suggests we already underestimate these interaction-based side effects by a factor of 4.
so the planned top-down rationalistic approach fails because the complexity of the existing drug body matrix makes estimating these side effects mathematically impossible in a nonlinear environment.
The rationalistic belief that we can engineer a clean top-down solution into an inherently complex system is fundamentally dangerous.
Now, conversely, we have to examine the antifragile side of this equation, systems that react to stress or harm not just by surviving, but by strengthening.
This is the structural principle of hormesis, the concept that individual organisms or systems benefit from damage or stressors up to a certain necessary limit.
Hormesis basically argues that excessive comfort creates systemic fragility.
Yes. We see this with hygiene and antifragility. The overuse of disinfectants and the consumption of excessively refined foods deny the developing immune system its necessary stressors.
Our immune system is a convex system. It benefits from small bouts of disorder and exposure.
And because we have structurally denied the system its beneficial disorder through hypersanitation, we are now forced to consume supplements, like probiotics, to compensate for the missing stimuli.
We've replaced the natural, messy, convex input exposure to germs with a manufactured, fragile, and often inefficient intervention, a pill.
And this hypercompensation effect is powerfully visible in social and political systems when they're attacked or repressed.
In political repression, persecution directed at an anti-fragile movement or entity actually causes it to strengthen. The stressor triggers a disproportionate response.
The Roman philosopher Seneca observed this phenomenon centuries ago. He wrote that frequent punishments awaken anger in everyone, just as trees, when pruned, sprout countless new branches.
So mechanically, we see this in revolutions. When authorities literally cut down the movement by repression, the surviving nodes of the network grow new heads faster and stronger.
They fill the vacuum left by the weak, who were easily suppressed. The systemic response to the political stressor is a proportional or even hyper-proportional increase in strength, making the overall system more resilient against future attacks.
And this extends to biology.
In biological resistance, the more you harm bacteria up to a limit, short of complete eradication, the stronger the survivors become.
Which leads directly to antibiotic resistance.
You've performed a systemic stress test that kills the weak and selects for the strongest, most resilient strains. Similarly, cancer cells that survive toxic chemotherapy may multiply faster and fill the vacuum left by the eliminated weaker cells.
So the intervention, while it's targeting the fragility, inadvertently strengthens the surviving antifragile elements.
The system's response to the stressor is often an unintended and dangerous structural increase in resilience for the remaining population. Which brings us to our final section, which addresses the ultimate practical challenge.
Right. Given the fundamental limits of prediction in these fat-tailed complex systems, a limit we established back in Section I, how can we use simple practical heuristics to detect existing fragility and exploit antifragility in real time?
We have to start by restating that core limitation. The source is unequivocal that highly improbable events in politics and economics are fundamentally unpredictable. They can't be measured by scientific methods.
So the attempt by intelligence analysts or economists to predict political revolutions or crises is a fundamental structural error.
They trade in false certainty, offering fragile predictions packaged as robust knowledge.
And this failure comes from a reliance on naive rationalism, the belief that all necessary knowledge is accessible and available within these codified academic frameworks.
Which leads to a systemic overestimation of the value of knowledge that is commoditized and packaged, like a university education, formal modeling, abstract theory.
You're drawing a clear structural line here between two types of knowledge: theoretical knowledge, episteme, and practical skill, techne.
Know what versus know how. Exactly. Episteme is knowledge that can be written down and taught in a classroom, the theory of risk management.
And techne is non-codified, practical, hands-on skill acquired through apprenticeship, experience, and continuous small-scale failure, the actual ability to manage a crisis.
It's like book smarts versus street smarts, but for systems.
It is. The source material argues that systems built on episteme are fragile because theoretical knowledge is so easily overturned by unforeseen events. Practical skill, techne, is far more robust.
The reliance on episteme creates a systemic fragility, especially when policymakers treat complex realities, like the global economy, as if they were predictable, linear problems, like a simple card game.
Consider the success of the Swiss model in banking, which is cited in the source.
Its historical resilience relied heavily on apprenticeship, the transfer of technique from master to apprentice, not the formal, bookish episteme that's so prevalent in other wealthy nations.
The emphasis is that robust systems evolve through chaotic fitting and practical heuristics, not through fragile, top-down theoretical
Which are
plans.
so easily overturned by the first black swan.
So since prediction is inherently limited, the most reliable strategy for system navigation is based on identifying what not to do.
This is the structural logic of via negativa, the negative path. It focuses on identifying what is incorrect or harmful with greater certainty than defining what is correct or beneficial.
This is the basis of subtractive prophecy.
It is.
I find this incredibly powerful because it acknowledges epistemic humility. Instead of trying to define what will happen or what will make the system better, which is an additive approach,
We focus on identifying and removing what will not survive or what is demonstrably harmful, a subtractive approach.
it's about what to remove, not what to add.
Exactly. The practical application focuses on identifying and removing sources of fragility first. The sculptor metaphor is perfect for this. Michelangelo claimed he created David by cutting away everything that is not David.
So the first priority in achieving antifragility is removing negative exposures, removing known toxins, removing centralized failure points, removing policies with clear iatrogenic harm.
Not adding more complex, unproven systems on top.
And this subtractive detection can be applied historically using the Lindy effect, which leverages time itself as the ultimate filter of fragility.
The Lindy effect suggests that the expected future lifespan of non-perishable objects, knowledge, books, technologies, certain systems, is proportional to their past lifespan. Time is the ultimate stress test.
So what has endured for centuries? Ancient kitchenware, Stoic philosophy, classical texts is likely more robust and less fragile than what's being hyped today.
A conference paper from 5 years ago, or a rapidly emerging yet untested technology.
So we detect resilience not through sophisticated forward-looking models, but through a simple subtractive heuristic based on survival history. Time is the proof.
If an idea or technology has survived for 1,000 years, it's demonstrated a structural anti-fragility against the disorder of time, wars, political change, and refutation. New theories and technologies are inherently fragile until the Lindy test proves otherwise.
And finally, we can often detect fragility and antifragility almost instantaneously by examining the payoff relationship.
Which often correlates to geometric posture, the concavity or convexity of the system structure.
The source provides a vivid, almost visual metaphor for this.
Imagine a drawing of a lawyer or a solicitor bowing deeply inward, hunched over. This concave posture, where the head and feet are close together, geometrically represents fragility and negative nonlinearity.
Any unexpected stressor will snap the system, leading to collapse.
Conversely, a posture bending sharply backward, where the head and feet are far apart, represents anti-fragility convexity.
This visual geometric detection leads us directly to the mechanical strategy of exploiting convexity bias, the philosophy of the Philosopher's Stone.
This is the ability to structure your exposure to uncertainty so that you gain benefits that exceed what your current knowledge guarantees, regardless of whether you can predict the future.
The ability to generate that asymmetry is what matters.
And the greatest historical example of this is Thales' option. Thales, the ancient philosopher, foresaw a good olive harvest, and he paid a small, fixed sum to secure the right, but not the obligation, to rent all the olive presses when demand was high.
This is pure mechanical brilliance. His potential loss was strictly limited to the small upfront fee he paid.
If the olive harvest failed, he lost nothing but that small amount.
But if the harvest succeeded, driving up press demand, his potential gain was unlimited. He could charge whatever the market would bear.
It is the perfect asymmetric payoff structure, a non-linear response function with capped downside and unlimited upside. This structure is convexity in action.
The structural design of the option ensures that he benefits disproportionately from high volatility, like a massive harvest.
While being completely protected from negative volatility, like a poor harvest. This exploitation of asymmetry is the ultimate mechanical strategy for thriving in an unpredictable, nonlinear world.
So we have analyzed the core architecture of antifragility. We established how suppressing minor, necessary disorder creates catastrophic systemic risk via the turkey problem.
Right.
How the agency problem allows fragilistas to privatize gains and externalize catastrophic losses onto the system.
And how top-down intervention often creates more harm than benefit generalized iatrogenics due to the failure of teleology and complexity.
Finally, we saw that detecting true systemic health relies less on sophisticated, fragile predictive models, or episteme.
And more on simple, time-tested heuristics, the Techne, like the Barbell Strategy and the subtractive logic of via Negativa. For you, the learner interested in systemic intelligence, the key mechanical takeaway is this. Measurement of future risk is often futile in fat-tailed systems.
It's a fool's errand.
It is. The only reliable strategy is architectural, structuring your exposure so you are always protected from large negative deviations concavity and always exposed to large positive deviations convexity.
So what does this all mean for the systems you inhabit or the organization you manage? Consider this final thought, rooted in the principle of decoupling. If we cannot rely on large, centralized institutions or experts because their incentives are structurally decoupled from the catastrophic risk they create, where does the ultimate resilience of a society or an organization truly lie? Not in the grand centralized plans, but in the small, decentralized, highly redundant, and sometimes inefficient elements, the ones that are constantly exposed to volatility and allowed to fail on a small, manageable scale. How might you redesign a fragile system simply by strictly enforcing the rule? Everyone who benefits from the gain must also physically bear the consequence of failure.